welcome. You've sort of cut across the board with some names that have been darlings for Burlington, Ross Stores, TJX among them, cutting EPS estimates and so forth. Why?
Yeah, Tyler. So keep in mind, the numbers we cut, price targets didn't get cut. So we are actually warming up to the off prices. We have a buy on Burl, warming up to Ross and TJ. I think that it's more about understanding where we are in the cycle for our space and also understanding what's going on with off price. At the highest level, what's going on is the last 18 months to 2 years, it's been very hard for these guys to run their model, acquiring inventory, closeouts, et cetera. People didn't need the off-price channel. Inventory was lean. Everyone didn't need closeouts. Now that's changing. All of our checks are pointing to inventory dislocations picking up. We know inventory in the space is heavy, and that's really starting to set them up well for 23. And I think at these levels, it actually starts to be kind of a clearing event, even though Q2 in and of itself might be a little bit weak.
So let me make sure for the people who are considering buying these stocks or who own them, because many people like them, as you seem to. What does your call really mean? You're saying earnings are going to go down in the near term, but you like the stocks in the longer term. Am I understanding you correctly?
Yeah, I think the setup is improving. And so, why is that? If numbers are going down, why wouldn't that be bad for the stocks? Well, it's because the inventory dynamics that are taking place within off price right now, you're not going to see in the numbers right now. If they're getting really good buys with great buying margins and packing away high quality branded product that's going to get unleashed, in the next 6 to 9 months, that has nothing to do with Q2 earnings. So you have to the market's forward looking. You have to look past these things. And you've seen it with names like Bath and Body Works, BBWI, which negatively pre-announced a couple weeks ago. And what's happened since then? The stock opened up down 10%, then it closed up, and now it's up 25% more. High quality names, early cycle group. You have to buy some of these names early, so you can't sit on your hands too long. Otherwise, you miss out on some opportunities to own some very high quality assets within discretion.
So, once again, if we get numbers today that aren't what we might have been expecting here, if it comes down a little bit, don't freak out. Don't run to sell your shares. If anything, maybe add.
Yeah, I got to be careful because I only have a buy on Burlington.
Right.
But what I would say is the Q2 numbers in and of themselves should not be scary unless there's something that maybe there's an execution misstep. Maybe a company, maybe one of them is buying a category wrong. Maybe there's a management change. Something that we're not really thinking through right now. Absent that, if we're just talking about a weak Q2 and a cautious back half guide where we need to lower our numbers, I don't really view that as thesis changing. So if you own those names, I don't really think that should change your view.
So let me ask a sort of freshman level question. Do the inventory issues that are afflicting some of the bigger stores like Target and Walmart and others, do they help these little guys?
Over time, yeah. So it's going to lead to more closeout buys.
Right.
And remember, closeout buys are higher margin buys for these guys because it's liquidation. So they're going to be getting a much better margin selling that stuff than they would on product that's made for them. On top of that, and we know the issues that are going on with apparel inventory specifically in the space right now. But it's not just that. I mean, our checks are showing that there's a lot of product over in China right now. The supply chain bottlenecks are not behind us. And this is just going to kind of fuel more and more close out and pack away buys for these guys. And remember that the key here is you're not going to see the benefit of those buys coming through until they sell them, which won't happen until early next year. So again, this is why it's not about Q2. You need to kind of look forward.
I am going to get to go home this afternoon and tell my wife that come January, there's going to be some good stuff in her favorite store, Home Goods, right?
I want to know what she says.
All right. Yeah. No, I'll be there with her, waiting in the car while she goes in. Ike Boruchow of Wells Fargo, thank you.
Shepard Smith here. Thanks for watching CNBC on YouTube.